Good evening, everyone. Welcome to the webinar on who will win the race for alpha fund managers versus AI. I am Aravind Ravindran from PMS Bazaar, and we are delighted to have you join us today. In the rapidly evolving landscape of investment management, the quest for alpha, the pursuit of returns exceeding market benchmarks, has taken the center stage. With the advent of advanced technologies, particularly artificial intelligence, we are witnessing transformative shifts in how investment decisions are made. So, in today's webinar, we aim to explore this dynamic interplay between traditional fund management and AI-driven strategies. For that, we have our esteemed speaker, Mr. Sankarsh Chanda, founder and CEO at Savart. Mr. Sankarsh started investing in the capital markets at the age of 14 and published his first book, Financial Nirvana, at the age of 16 and dropped out of his bachelor's degree to start Savart at the age of 18. With a mission to make investing simple, intelligent, and accessible, Mr. Sankarsh built Savart from the ground up, leveraging AI-driven research and an investor-centric approach. His work has transformed how thousands approach investing, breaking traditional barriers to wealth creation. Savat's operations now include investment advisory services, financial planning, portfolio management services through the Adastra Fund, Nirvana Education Program, and the Apart Enterprise Division. Welcome, sir.
Thank you. Thanks, Arvind, for having me here.
Yeah, thank you, sir. So, Shankar sir, I hope a lot of our audience have joined this call to know about artificial intelligence powered portfolio management services.
Yeah.
So, why don't you start by giving us a brief on your Adastra fund?
Sure, absolutely. So, Arvind, I think I'll just give you a quick introduction. You've already kind of set the context, but I'll start with what Savart does. And especially, I have to give a disclaimer in these times where everybody's talking about AI, right? So, I need to be more careful. So, is this another company that's talking about AI because it's hot today? Absolutely not. So, our entire company's premise from inception, which is 6 years, 7 years back, was the idea that automation of investment research is very critical, right? So our belief was that human fund managers have a lot of caveats, bias, emotions, and there's underperformance that kind of is persistent across timelines, asset classes, and geographies, basically. So the data, there's clear evidence that suggests that human fund management lacks a lot of key metrics that or key benchmarks that it needs to perform on. Now, there are exceptions everywhere. It doesn't mean all fund managers are bad, but there are only a few extraordinary ones, and the remaining fail to do what they're supposed to do, right? Now, if say a surgeon or a doctor says that a certain kind of operation where 95% of the surgeries or the operations are not successful, then it means there is something unscientific happening. So 5% cannot be your hit rate or accuracy rate, right? It has to be something better than that. So now when we understood that, we quickly started focusing on automation of investment research. So always the buzz was around robo advisory when we started investment advisory, right? So people were like, okay, oh, you're using some kind of automation to give advice. But robo advisory in itself was very superficial in nature, because whatever the advisor is thinking or the fund manager is thinking, the same rules are simply written in code. Instead of manually giving the basket of portfolio or giving the advice, now the process was simply automated. There was no intelligence in that entire system, right? So I only decide that Arvind is a conservative investor, Nikhil is a aggressive investor, Kalyan is a moderate investor, right? I'm just writing code which automates that process. So then we went one step ahead and said robo research is something that we wanted to pioneer, right? Where the process of investment research from discovery of the security until exit, we wanted to automate this entire process. And that's how our Apart AI was born in 2019 September. So it's been close to 6 years now, 5.5, 6 years since we've been working on that system. So to give you a brief, Savart has investment advisory division, a PMS portfolio management service, a financial planning, an education, and an enterprise technology division, especially focused on asset management companies. So where Apart AI is used to deliver insights and a real-time business value for other investment decision makers, basically. So when we started in 2019, our idea was clear: whether it is quantitative analysis, qualitative analysis, portfolio tracking, rebalancing, exit. This entire process we wanted to automate. That's why Apart AI has three engines: Quant, Iris, and Synapse. So Quant looks at quantitative data, anything that can be numerical or mathematical in number, like P&Ls, balance sheets, cash flows. Then Iris looks at qualitative analysis, which is all about corporate governance, sustainability, moat, ethics, and data from con call transcripts, annual reports, news articles, blogs, op-eds, magazines, journals. And remember, these are the things we started working much before the current buzz, right? So we started doing this linguistic analysis, contextual analysis, things which were already in the market, but very rarely applied to fundamental research in capital markets. So we started working on things like that. That's how we have a heads up over most of the peers in this market at this point of time. And for us, AI is not kind of a eyewash, right? So okay, just use some kind of a small GPT or an LLM and or create a chatbot and say yes, we are an AI powered company. So we are an AI first company, we are an automation first company, and we want to rely as little on human interference or intervention as possible. So that's very broadly about what we do, Arvind. And with respect to the Adastra fund, the other part of your question, right? So the Adastra fund is the discretionary portfolio management service that we launched around 14-15 months back. Now, Adastra was something that we conceived after doing 5 years, 6 years of advisory and over 4,500 crores of assets under advice that Savart is currently handling. We believed that we need to go one step ahead and also start managing capital. It gives us the execution capabilities, there are lesser restrictions, more aggressive decisions can be taken. So that's when we conceived the Adastra fund. It's a discretionary fund, sector agnostic and market cap agnostic, which means from micro cap to mega cap across different sizes of companies we invest through the PMS. And the most interesting part or story about our fund is that there is no story or narrative, right? So we don't tell stories all the time. So we don't want to say we are a growth fund, we are a dividend fund, we are a value fund, we are a large cap focused fund. We are an alpha focused fund. So our strategy is to be flexible. So because the entire decision making is done by our Apart AI, we do not need to put ourselves into small buckets and restrict our returns, right? So when you say I am a certain kind of an investor and the fund manager has to stick to that narrative over the years, the ups and downs are very deep. The up is very high and the down is very down, right? So that is the reason you see for every 3 to 5 years, the best performer or even the top quartile of performers has such a churn. So even investors are frustrated that every 3 to 5 years they have to switch their fund. That should not be the case. So the idea with Adastra was we don't want to be the best performer every year, not even for majority of the years, but we want to be the most consistent performer over the years. And what we have done with advisory, where we have done quite a bit of alpha with our advisory portfolios, we wanted to bring that even to the PMS division. And I'll give you a quick 2 to 3 minute characteristics of the fund as well. Before I think we can take a lot more questions, I want to keep my monologue short. So in terms of the fund, the only restrictions or say the philosophy of the company is we are very fundamental research focused. We do not do any kind of technical analysis. So that means we don't try to time the market and we don't optimize for every 2, 5, 3 or 7% of up and down in the stock price, right? So we enter into companies where there's a large margin of safety as well as large potential for growth. If it's a 20-30% upside, we don't even bother getting into that company. It's very focused on direct equity, Indian markets, while the strategy says it could invest into other few other instruments as well. Most of the money is in direct equity at this point of time. We have a quite a bit of exposure towards Nifty ETF as well. The benchmark, however, is the S&P BSE 500. And in terms of market cap wise allocation, we have around 35% in small cap, we have around 15% in large cap, and right around 19% in mid cap. So that's broadly the asset allocation, and we have quite a bit of cash position at this point of time. Now, in a certain stock or in a certain cash position, what is the allocation? When to move it? What is the quantum to maintain? What tranches? Everything is guided by the system. That is why we never make claims that we are going to do this or we are going to do that, right? Because we move with the market. Our system is trying to adapt, evolve as the market situations change and new information keeps coming in, right? So that's the idea with our Apart AI. And last, in terms of our approach towards risk management or about making our systems better, one thing that we'd like to flag is we are neither claiming nor is it reasonable to claim that AI is perfect. It has its own flaws, right? The idea that we started with Savart and with Apat AI is the benchmark for human fund management was so low that even a few optimizations was putting us in the higher league of performers, basically. Now we started there, but the idea is to keep reinforcing our systems, make them better over time, and that's why we are very obsessed with data, right? So everything from electrification to highways to cattle to livestock to animal husbandry to all your traditional macros to every single microeconomic data as well as a security level data. So we are obsessed with that. So we are technically a not even an AI first company, I should say we are a data first company. So that remains our core focus and the idea for investors, right? So I will conclude with an important point. So we've got a lot of queries when clients ask that how do you explain your investments, right? Or how do you know that your system is doing something for a reason? Now that's a very interesting question because we always say that the stock market is a complex adaptive system, right? Which means reason and consequence need not always be very clear, or they need not be linear. It could be a non-linear equation for that matter. So it is very waste of time, I would say, to attach reasons to every single market movement, right? So the quarterly results were bad. That's why the stock fell. But why does the stock price move up then sometimes when the quarterly results are bad, or the opposite of that, right? So we don't try to attach reasons, especially in the short term. We try to go with the flow. We believe in our systems. It's been 6 years, so it's not a system that's sprung up yesterday and we are saying believe in it. There's an entire track record, not back tested, but real time. And we do not ever spin any narratives about why we made some decision. So we give some very broad philosophy. We give a very broad understanding of why our system is making certain decisions. But at the end of the day, we will not know to a great clarity why the system is doing that, right? Now, while that will sound scary, many human fund managers also, when they talk about their investments, they're talking at a very macro level. After doing tons of research and they invested into, say, a cable company, and there was a short circuit in the factory and the factory burned down and there was no production for 6 months. Now you tell me what kind of research will be useful in that kind of scenario, right? So there's so many factors that affect. So that is what we want to respect, and we want to be humble in the markets, that we don't know a lot of things, basically. So that's where our entire system comes into play. And we maintain concentrated portfolios. Our churn is a single digit. Our average holding periods are over 3.5, 4 years with each security. We don't invest into more than 13, 14, 15 stock. That's a pattern that we have seen with our system. So that's broadly, Arvind, about the Adastra fund and what we do.
Okay, okay. Interesting, very interesting, sir. So, how those three engines interact with each other, sir? You have explained about your quant, iris, and synapse.
Yes.
So, how those three things interact with each other, and how did you develop the system? And also, what are the advantages the system is providing you?
Sure, absolutely. So,
Mm,
I'll answer that in two parts, right? So, number
yes.
one, how they interact with each other. So,
Mm,
Quant and Iris are market-focused systems. The Synapse, the third engine, is a client-focused and the portfolio-focused system, right? Which means Quant and Iris are responsible for filtering the entire universe of the, say, Indian listed universe, whatever is there. That's all in our coverage, basically, from filtering from, say, 5,000 plus listed companies to say around 200, 250, or 300. That number depends on times and what kind of algos we are running, basically. So the quant does around 95% of the filtering, or even higher than that. The iris is responsible for doing that last mile filtering, where we go into the depth. So I'll give you examples in both the cases of how quant works and how iris works. So for example, we tend to have a lot of assumptions in general about things, right? So for example, GICS, the Global Industrial Classification System. So everybody says Tata Motors and Maruti Suzuki are in the automobile industry. They have a similar business. Now, what is an industry? How do you define a sector? Which two companies are the most similar to each other? So we question every single, say, belief or an ideology as well. So we don't go with GICS or with any other classification system. We built our own cohort classification, right? Which two companies or which cohort of companies are the most similar. Now, once our system finds that, we try to understand what kind of parameters. Now, these parameters, some are conventional parameters, others are generated parameters quantitatively by our own system. Now, these raw data are then a kind of we try to understand what influence these parameters have on the share price appreciation, and then we try to understand what values or what kind of ranges of these parameters are the most optimal. For example, debt to equity, right? So some will tell you 2 is bad or 2 is good, less than 2 is even better, more than 2 is bad. But again, debt is a very complicated number which cannot be just put into a single parameter and made a decision on. What industry you are in, if your cost of debt is lower than your the returns on your business, and if you're able to use it well, then you're actually doing a good job. And a lot of investment decision makers love to say this company is debt free. One of the reasons we are investing, debt free is not a great thing sometimes, right? So it's okay to have debt. I mean, if your business is growing, then what's the problem in taking debt? So quant and iris, when they interact together, these kind of assumptions or hypothetical beliefs, right? So these misconceptions are withdrawn basically. So it starts from scratch, questions everything, and comes to a conclusion that this parameter is important, this kind and this time and this range is more important than anything else for this kind of a business. And it helps us compare the right kind of companies with each other. And when it goes to iris, I'll give you another example of the qualitative analysis. So when say a certain promoter or a MD says in 2018 that in 6 to 7 years, or say by 2025, our company will be a carbon neutral company. It's written somewhere in the MD's letter or chairman's letter in the annual report 7 years back. Now, first assumption that you are whoever the fund manager or the individual investor, I am assuming they are a very diligent investor, so they will read 7 years annual report. Second, after reading 7 years annual report, you have not missed the line somewhere hidden in the footnote, and you have made a mental model or you have made a mental note, sorry, of what has happened. And then you come back to the 2025 report and see if there is some mention of it. In most cases, when the company has not achieved their promise, they won't write about it, right? So the human eye or the human brain is focused on what's written, but what's not written is what iris will do basically, right? So it finds that out and flags that risk basically, that this company has said something and it has most likely not achieved it. And when a company has not spoken about its achievement, it means it has not achieved, and it shows you the percentage of it basically, right? And then second example, a company has 500 subsidiaries across the world. In which subsidiary what paperwork is being submitted, what returns are submitted, you have absolutely no clue, and it's not manually possible to go through that, right? So that's the speed that the system brings in. So a single analyst or a fund manager can do one company in what, a few days, few hours, maybe if they're super fast, and say a few hundred companies in a year, maybe at max. Our system can do the entire Indian listed universe in flat 7 seconds. So that's the speed that we are talking about. So by the time somebody has opened an annual report, we have already scorched through the entire market, right? So that's what kind of, I mean, those are the benefits: speed, low bias, and deeper insights, blind side detection. These are all things that the system can do.
Okay, oh, mind blowing, sir. This is mind blowing. So you are also providing this apart AI system to other asset managers, isn't it,
Yes,
sir?
correct.
Okay, okay. Sir, yeah, as you mentioned, your Adastra fund has been designed to keep the portfolio churn as low as possible. So why do you think this is a defining factor for long-term performance of the portfolio, sir?
Sure. So I would say it has not been designed, but it is a mark of our success and why we are confident about our performance, right? So if the system was not mature enough, if its thresholds were really weak, we want to be a fundamental investor, right? We've infused our philosophy into the system. And if there are too many trades, if there's a lot of churn in the portfolio, it means something is wrong about our system, because the basis of fundamental research is long-term holding, right? It's about patience. It's about letting the business thrive and show up its numbers on the share price. So if it was not doing so, I would be really worried about it. So we've not designed it to hold for long term, because if we put our bias again, then you are ruining the system, right? So if it says sell this stock in say 3 months, and then you're saying no, I'll hold it for 3 years, then that's not system. You are making that decision which has no value again, right? So that is that is a pattern that we have seen. over the last 5 to 6 years. And the good part about it for investors that you're asking is most of the times, most of the activity that is conducted in a fund is just a show off, basically, right? Fund managers or the investment decision makers want to show action because action brings fees, right? If you take fees without doing any action, clients, most clients might question you over time that why should I pay you if your portfolio is the same, right? So when that kind of education is there, the understanding is there that action doesn't equal to better performance or alpha. In many cases it's the opposite. Action ruins return, basically it ruins performance. So not doing anything is much beautiful than doing something. So I think that's a mark of good systems, mature algorithms, and that's what we are, one of the things we are very proud of, actually.
Okay, okay. That's a key takeaway, sir. So, how does South approach risk management in its PMS strategy, sir? And especially tell us about your antimatter system in APART.
Sure. I mean, I'm glad you even brought that up. I thought you wouldn't remember that from the last conversation. So I think so. Antimatter is kind of like the beacon of our entire system. And mind you, whatever I'm speaking about, these are all continuous works in progress, right? We it's not like this. Okay, yeah, this mobile app is developed and now we're sitting on that. Every day we find problems, we solve it, and this is going to run for maybe a decade. Whether it's antimatter, quant, iris, synapse. So I might be sounding like I have figured out a lot of things. It's just that we have figured a few more things than normal, but not all the things, not even close to all the things. And we're at least a decade away from complete maturity. So in terms of antimatter, the idea was it's about questioning every single investment decision that the system makes, right? For example, we had a certain stock XYZ in the portfolio. What was the reason XYZ came in? If we can find out reasons or with certain amount of confidence of the system on what happened, and if XYZ did not perform well compared to benchmark, compared to its peers, or if we had picked ABC instead of XYZ, the performance would have been better. So all those permutations and combinations are run by the system. Then backward assessment is done on what led to the underperformance, and the system tries to get better over time, basically by learning from its mistakes or learning from scopes of optimization. So why that stock did not come into the portfolio? Why did we miss that multi-bagger? Right? So we cannot hold every multi-bagger or pick every winner ever, but this is the direction in which we go. So learning from mistakes is something that is done, right? And next, because we don't have things like stop loss, we don't have things like target price, what we do is if there is a certain stock that is being held and there's a real time information or a news article about what's happening in the company, decisions are done on the fly, right? We don't wait quarterly results, we'll take it after 1 week of internal discussion, there's nothing. So you're holding something materially negatively significant has happened, the action will be presented immediately. So right, we reduce the a risk of inaction also. Not just low activity, but inaction sometimes also kind of is very expensive. So even those kind of situations are managed by the system. And because the COVID fall and the sideways market over the few periods in the last 5 to 6 years, our system has been through those tough times as well. I can't say it has been through all tough times, but 6 years is a good period of time for us to see if it is doing well even during uh, bad markets, basically. And it has shown good resilience, especially during bad times.
Hmm. Sir, I think your Adastra portfolio has around 30% allocation in cash and cash equivalents. Why do you have this substantial allocation to cash? And do you anticipate any correction due to overvaluation or any tailwind in the economy?
Honestly, I don't know the answer to it. Like I said, honest answer is we don't know. But we are slightly less than 30 right now. I think it's around
Oh.
23, 24. We were at 33. The numbers have drastically reduced over the last 6 months, and we have been reinvesting. So Nifty 50 is also, I think, around 15-20% of the portfolio at this point of time. So we this is something, a call that our system takes honestly. I mean, after this conversation, tomorrow we might deploy the entire cash. I have no clue. So I won't make
Hmm.
any predictions because I don't know. And that's, I feel that's the right thing to say. But we have seen the system maintain at a minimum over the last 6 years 1% or 2% of cash position to a maximum of 67.5% cash in our advisory also. So it can be that broad range, basically, of what the system can do.
Okay, okay.
Yeah.
So banks and healthcare find a higher allocation in your Adastra portfolio. So what is your outlook for the sectors going forward? Fundamentally.
Sure. So I'll give you my personal opinion because Apart
Hmm.
doesn't have an opinion on stuff.
Okay.
So I mean these particular companies we are super upbeat on actually, not just banks, but also we have few very small cap, micro cap kind of companies in the engineering space. We have in infra space. So those are doing pretty much well, and refractories kind of thing. I'm sorry, not refractories, but waste management kind of businesses as well, scrap related businesses. So those are some niche businesses that the system has picked out, which does not just satisfy our performance greed, but also a little intellectual satisfaction that it is something new, right? Even many times we've been asked, Sankarsh, HDFC, Kotak, that everybody knows, pick something exotic, right? So pick something which nobody has heard of. So again, we used to answer saying, I mean, the idea is not to be exotic, it's not to be showing activity, it's about doing maybe boring things consistently well, right? That will give the results. But in this portfolio, we have a great mix of small companies which are really promising in their business, very niche businesses. And most of them, if you notice a pattern in the portfolio, there will be companies which have certain kind of monopolies, or say, if not monopolies, they're the pioneer in their industry. So those patterns are good to see. Of course, not all the companies, but at least four or five out of the holdings that we have. And banks, I think that industry is so large and sector is so large that it is natural for the system to have some exposure towards that. I mean, it can't be ignored. At some point of time, some bank has been in our portfolio for the last 5 6 years. I mean, we don't control that.
Fine. Okay. Given the current global economic landscape, what major trends do you foresee influencing equity markets in the next 12 to 18 months? Given the tariff scenario and war scenario, what do you think?
Honestly, again, there's just so much happening at this point of time. We have no
Yes.
clue.
Yes.
But I'll give you certain examples. Right, one example at least I will give you. So, which is not a micro situation, but a black swan event of COVID, right? So on Jan 2nd, 2020, our system gave a call of moving 65% of client assets of across all assets, across all portfolios to cash, right? So
Okay.
now we had no clue why, what was happening.
Mhm.
And if now in hindsight, you might be thinking, okay, COVID was coming then. So maybe you guys were pre-signed. We have no absolute no idea. And we absolutely do not know anything about COVID or that it's coming and it's going to hit so bad at that point of time. But 2 3 months later, we all know what happened with the crash in the market and everything. So what we know and why I gave you this example is we are not just looking at security level data, but also a lot of macro data. Now, what factor, whether it's a trade deficit, tariff, or say a geopolitical stability, instability, or stability, right? Or GDP numbers. These are all very traditional things which are plugged into our systems already. So anything could trigger a required or requisite action in our system. And honestly, we don't care a lot about anything less than 36 months, right? We don't care what happens. Anything less than 3 years, we are like, it's fine. I mean, we are invested in good businesses. Come what may, we are good to go with that, basically. So that's the idea.
Okay. Got it. So I think the audience questions have started coming in. Dear
Sure.
participants, the forum is open for Q&A. You can post your questions in the Q&A box.
Yeah. So
Yes.
should I take those from bottom or the top?
Yeah, yeah, I'll give you, sir. I'll
Perfect.
give you, sir. So
Perfect.
I have a few questions. So
Sure,
post
sure.
which we can go ahead with the audience questions.
Absolutely.
Yeah. So beyond AI, what emerging technologies do you foresee will impact our investment landscape, sir? Like quantum computing, blockchain.
Yeah.
So
Uh,
what do you
I
think
mean,
will enhance this
this
industry?
There's three to four that come to my mind. This is not an exhaustive list, but one you already mentioned, quantum computing. I mean, that's something that we've been really, really, really excited about. We, of course, no scope for investing in the Indian market into quantum computing at this point of time, especially in the listed universe. And that's one of the reasons in advisory we have the American markets and Canadian markets covered, where emerging sunrise and ultra deep tech industries, right? We invest through our apart AI there as well. So those give us diversification opportunities. So quantum computing is one. Hydrogen based propulsion or energy generation. I think that's already happening, National Green Hydrogen Mission and things like that. That's an exciting new technology. Space tech, that's a next big thing. Private getting into space tech, it's already happening. Nothing hypothetical about it. That's a reality. But also a disclaimer is because I own an aerospace engineering company myself, and we are also working on hydrogen propulsion. These are some things that I'm biased towards, right? So space tech as well as hydrogen as an idea. So I think these sectors are something that's going to really do well. The one gray area that and these are all personal opinions, okay? This is not parts opinions. So EVs or battery technologies, right? We're something that's kind of a gray area for us so far, just like cryptocurrency. We don't understand both of these businesses, right? EVs are going to sustain, or are they a transition between petrol and something like an hydrogen, or is it is a transition that's going to remain? We don't know. We don't have that clarity. That's why EVs don't make it to our top three or top five excitement list, basically.
Oh, okay,
Yeah.
got it. So why don't you tell about your aerospace project, sir? So just
Oh,
a small brief
sure, sure.
for the
So
benefit of our audience.
absolutely. So we're building spacecrafts. That company's name is Stardour, Stardour. So we build
Okay.
orbital transfer vehicles. So as the name suggests, it's a vehicle that transfers goods, payloads between orbits, basically. So whether somebody wants to go to LEO, low Earth orbit, GEO, or Moon, Mars, beyond, our spacecraft can take them, basically. So not humans at the moment, but goods and logistics. So as humans prepare to go to Mars, we are building the logistical network to take goods and systems to Mars, basically the infrastructure and the payloads to Mars. So that's what we are building, and we are working on water propulsion technology. So our spacecraft is propelled by water as a fuel. So our fuel of our spacecraft is water, basically, and we have built some great intellectual property around it, and we've conducted our engine fire tests successfully and made good progress over the last few couple of years, actually, in that space.
It's fantastic, sir. So, what inspired you to venture into investing at such a young age, sir? And how did you cultivate the confidence to pursue this path without any formal qualifications?
Absolutely. So, I don't
Mm.
have again a correct answer to that, but reading books, I loved it. That's how I came
Yeah.
across investing, started reading, started doing it. And of course, I
Mm.
don't believe enough in myself making investment decisions. I rate myself as a very ordinary investor, nothing extraordinary about my investing skills. That's why we have a part, basically. And that's why it's not me picking stock. And of course, educational qualification, I dropped out of bachelor's. It was super boring, right? I think what I was learning and what I was doing in real life had no relation with each other. So there was a clear disengagement. So I had to get out as soon as possible.
Okay. Okay.
Yeah.
What common psychological pitfalls do you observe among investors, sir? And how can awareness of these improve outcomes for them? Investment outcomes for them.
Absolutely. So I think I'll take an example right out of the chat box, right? I was
Yeah.
reading one of the things. I think CSU is a user. So he said, like, it really scares me when the founder says that we do not know why AI is taking a particular call. How will you answer the clients regarding the portfolio, right?
Yes.
Now, there's a very pertinent question. There's a very reasonable question from a prospective client, right? So the thing is, either we be honest about it or we just simply lie about it. I can tell you, sir, I invested in Wipro because of so and so reasons, and you know what? This company is going to grow because of its so and so division. It's going to get this order. But in reality, even if my stock pick becomes right and I make money, the reason why I was right could be very different from the reality. So I thought Wipro will sell more of its software and make money. But say they ventured into FMCG space, started making more money, and the stock price grew. Right? So you were right, but also wrong at the same time. So what? So the my answer in to this would be, in market there are people who will tell you stories and people who will tell you what you don't know about or what they don't know about. Right? So we really believe knowing our limitations is very important. So knowing the reasons or why performance is a certain way over a certain period of time, especially short and medium term, absolutely nobody has clue, and anybody who's talking about it has absolutely no clue about what they're talking about, basically. So these are some psychological things, and other examples that I gave you about inactivity, right? So many times we are asked about, why are you not doing action? Do something. So we are like, I mean, why do we do something when that's not required? I mean, let the system take a call. It's not sleeping. The system isn't sleeping. It will do what it's supposed to do. And if the business is doing right, then there's nothing needed from our side to do. We should let it run.
Oh, perfect. So, being a pioneer in this space at such a young age, what guidance or advice would you offer to young or new investors in this modern financial market with such a long complexities?
Um, I think I'm still learning, so I will keep my message pretty short because I myself know very little. I would just say experimenting is very important, right? And people, a lot of initial investors who start with their research in the market, they like to copy trades or just okay, this person is doing this, let me just buy this stock. Most don't understand what research is and why research is important. Most of the market participants are simply gambling away their money. They're speculating in the market. So unless the difference between speculation and investment is understood, and the difference between a pseudoscience and a science is understood, it's going to be difficult to make money, right? So that would be my first thing. So I wouldn't say don't do trading, don't do FNOs, but look at the data. Look at the data objectively, and then you make a decision. And this is something that takes time, right? And it won't work out if you listen to anybody. uh, 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 you kind of need to experiment it yourself, basically. Only then you will understand. So
Un-
experimentation is the one word that I would say.
Understood. Sir, SEBI has recently relaxed several regulatory norms for this investment advisor regulation. So, how do you perceive this? This is going to change the investment advisory landscape in India.
Yep. So I think that's evolving. It's still at an early stage, is what I would say. I think in a couple of years, SEBI would be kind of very welcoming. They're already doing a lot of things in that regard. And in a couple of years, we'll see a very evolved regulatory environment, especially for investment advisors, which is very good. Most of the things, of course, we have our own compliance works and improvements and scope of things to do better. But most of the things that SEBI had mentioned about, whether it's about payment gateways, it's about invoicing, not accepting cash, limits, we were already following most of those things. And it's good because fiduciary duties, that professionalism comes to this industry. That's a good idea, basically.
Okay, okay. So, given SEBI's emphasis on this transparency and disclosure in investment advisory practice, how do you envision AI being integrated into advisory practice, sir, while ensuring compliance and maintaining client trust?
It's a matter of time, Arvind. I don't think if is the question, when is the
Okay.
question, basically. It's just a matter of time. It's going to happen. So there's only going to be two categories of businesses, right? Or at least in this industry I can speak about. One, those are enabled by AI, or their business is AI, basically, right? At least for the timing. And when I say AI, it's not just about machine learning or things like that. I'm talking about I should not, in fact, the word AI is wrong. It's about tech enabled, I should say, right? So that is going to be the future. So that's there's going to be human touch in different things. There's whether it's client support or relationship building, those things are going to kind of be there for a while. But I think tech is the way to go. Either they embrace it or it won't happen.
Mm, understood. So, what pivotal moment shaped your vision for South
Um,
in this
I
journey?
think for Savart, it's yeah, I've told this quite a few times. Like I think one day I was academically very good, and one day my parents weren't home, and the milkman had come so to deliver milk, and he asked me how many or like what how much do you require of milk, and I was confused whether milk is measured in kgs or liters. Okay, so and I was the Olympiad medalist, and I was really paper smart. I was really academically doing well, basically. So I was like, I mean, I got out myself out of that situation somehow, but later I realized that there's some disconnect in what's happening, basically. If I can't have basic street smartness, and I'm so it's like my book value is great, but my business isn't doing much, right? So I just wanted to kind of fix it, and I said, okay, I will not pursue the general academic kind of track, and do what I want to do, right? So and stocks and space, stock markets and space, I see a lot of similarities, and that's why they hold my passion, basically. So I think that event kind of pushed me a lot to do more work in this space, to get out of the normal stream.
Fine, sir. Sir, it's already 5:10. So if you are okay, we can go ahead with the audience questions.
Sure. I think if you're fine with that, I'll quickly do a rapid fire. I'll read the questions and I'll
Yeah,
not
yeah.
read, but I think just a name and I'll
Yeah.
answer those questions
Yes.
pretty fast, right? So I
Mm.
think Harshad was the first question. Over a 10-year horizon, I want a mutual fund strategy. Yes, Harshad, that's possible. If you want only mutual funds, that's great. The lesser the restrictions, I would say better. Be open for stock. Again, depends a lot on your risk profile. Happy to help you out. How accurate is AI-based suggestions? It has its own caveats, but like I said, better than the average human fund manager. Out of say 160 plus investment decisions that our system has done for Indian stock and mutual fund, less than four have gone wrong. So you can do the math there. Please specify the performance of the fund. Yes, I think Nirav, we are right around in over the last 1 year. We are, I think, TWRR 21 or 22% versus I think single digit 6 to 8% of the S&P BSE 500. We're doing a 2.5x or 3x. The latest numbers, May numbers are out. I
Is
think on
it
the
since
PMS
in,
Bazaar,
is
you
it
can check
since
that.
inception, sir?
No, I think that's around 1 year numbers. Since
Okay.
inception, I would ask that a team if you can share those data with the. We've shared that data with you.
Perfect.
We were
Perfect.
slightly underperforming on the inception side. First three
Mm.
months we didn't make any deployment actually, so I think that's the reason. But more or
Mm.
less we're doing pretty good. Very insightful conversation. Thank you. Can you talk about your returns like 1 year, 3 year, 5 year? We don't have a 3 year, 5 year on the fund, Nagraj. We are a 1.5 year old fund, and the numbers which I told you just now. And on advisory side, savart.com, that's our website. You can just go there on the homepage, you will see a 5 year history of our entire advisory portfolio. Also, would like to know how it handles geopolitics and tailwinds like private, public. Nagraj, I think most of this data comes from these news articles and the examples that I told you about how we pick up information. That's kind of covered. Micro cap companies, yes, we have companies below 500 crore market cap as well. NP is asking about PMS fund name. The Astra fund, Astra fund, right? And on the PMS Bazaar, you can please check that out. The
Yeah, sure.
quality of data is often questioned. Rishabh is asking. Yes, Rishabh, definitely there's a lot of low quality, incorrect, and biased data also that comes in. But the law of kind of big numbers, big data, to a certain extent aids us. We go to multiple sources. We also rank credibilities internally, look at frequency, quality of data, and then do that. So, yeah, I think Mronal is
Haider is
congratulating.
asking one question, sir.
Sorry,
Sankarsh.
who?
Haider is asking, you claimed to see the entire universe of stocks in 7 seconds. He want to elaborate answer on it.
Sure, Haider. I think when I said it kind of looks at the entire universe, quantitative assessment, the quant system that I was talking about, we're able to go through all those numbers in that period of time, basically. I mean, I'll technically say it's a very cheeky way to say that the system is just fast. That's what I meant to say. It's around 7.5 seconds, which is true. But that much speed is also not required, honestly. It's just to kind of deliver the idea of how fast it is to you. Uh, 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 so then, okay, I think last five, six, I will just take it, Arvind, and then,
Yeah, sure.
yep, NP is asking about the contact number. I think PMS Bazaar has it, and we can leave those details as well.
We'll share
Uh,
with them.
yeah, Yalo has asked about returns. We have done. And Rahul is asking, how do you justify human mindset versus AI as they are driven forces and there's demand supply not connected to market alone? Definitely, Rahul. Emotions are always there. But again, emotions manifest in terms of numbers or stories or some kind of data, basically, right? In the market. So if you're in the market long enough, if you are looking at the right kind of things, you may not be able to predict it absolutely, but you will get the direction. Like Howard Marks talks about market cycles. You might very approximately know where you are in the cycle. You may not know exactly where you are. So we need to be approximately right than be precisely wrong. That's the idea. So Vijay says complete honesty. Thank you, Vijay. Amrit, what percentage of overall cost is accounted by power expenses? We don't have a direct power expenses. The cloud or the data expenses, the server expenses, pretty huge. Most of the funding that our company has raised has gone towards either the tech team or the servers or the data basically. So I don't have an immediate number to answer, but it's a pretty significant number. Which software should I learn to implement AI in my analysis? I'm an individual investor. Uh, I do not know for individual investors. Sorry, but I'll try to answer that question later if you can reach out to our team. Why we are sitting on 23% cash? I think I answered that question. Do you have any proof or patents? I think the proof is in our track record, and we have put a lot of our data and analysis on our website. Either you can go through that. Patents, no software in India, kind of difficult to patent. How much alpha we can expect? NP, I mean, our idea is consistently give 3 to 4 to 5% over alpha or over the benchmark consistently, and we have done better than that in the past, and we keep doing that. What is standard deviation of fund? I think it's more or less in line with the S&P BSE 500 Deva, but I won't give you a exact number. I could be wrong with it. So I'll again, that data is available on the platform. Uh, I think which cloud platform do you use? Almost all the top 4 or 5 providers, Bhavya, and we are building our own internal systems as well. And how does an AI synthesize these factors like corporate governance, the contextual analysis, like I told you, how they're sticking to their promises, the management, and what they're doing about it. So, which is which AI GPU chip do you use? I think yes, we use A100s. I think we are using H100s. Again, I'm not the best technical guy to answer that, Bhavya, but if you're really interested in that, our team can answer that for you. I'm asking ChatGPT and get pretty good answers on investment. What's your advice? It can analyze pretty complex companies. Absolutely, Nagraj. ChatGPT is already doing a great job, but our systems are focused, specialized on this particular idea, trained over the last 6 years, made for the markets. And there are there's a question of breadth and the question of depth, basically. So some applications give you breadth, some give you depth, and we want to be on the depth side, basically. So, and we're not claiming to be a new system. We are already there. So that's the difference. I think we have covered all the questions, Arvind.
Yes, yes, Sankarsh. If there is any unanswered questions, I'll share it with your team, Sankarsh, so they
Perfect.
can answer it.
Absolutely.
Okay, okay.
Absolutely.
I think we have come to the end of the session, Mr. Sankarsh.
Thank
So
you.
thanks a lot. It was really insightful and very motivating also. So it's my pleasure speaking with you.
Thank you so much. My pleasure. Thanks for having me here.
Thank you, thank you. Thank you all for attending the webinar.